component is shareholders or stockholders' equity. The stockholders' equity in general means ownership of interest in a company. In other words, the remaining interest available for shareholders after deducting liabilities. Shareholders' equity components are common stock, preferred stock, additional paid-in capital, retained earnings, and treasury stock. For now, let's walk through every component one by one. The first one, common stock, represents the par value of issued shares. The second one is preferred stock, which describes the equity or securities that have a priority over common stocks on the company's dividends and assets. The most important characteristics of preferred stocks are dividend priority, means preferred stockholders receive dividends before common stockholders. Another characteristic is claim on assets, represent situations of a company's liquidation which preferred holders have higher claim on assets than common stockholders. And the last characteristic is voting right, which means preferred stockholders do not have any voting right in a company matters, unlike the common stockholders. Now let's move to additional paid-in capital. Additional paid-in capital represents the amount that received from shareholders, which is higher than the par value of the shares. Next one, retained earnings, illustrates a part of net income which is deducted to reinvesting and not going for shareholders' dividends. And the last one, treasury stocks, describe the amount of shares that a company has bought back from shareholders, means this is a reduction in total number of equity. It means it's true we write it down under shareholders' equity in financial statements, but we have to deduct this amount of treasury stock from total amount of shareholders' equity.